Hello everyone, and welcome to another episode of the Daily Gwei Refuel, where I recap the latest news in the Ethereum ecosystem. I'm your host, Anthony Sassano, and today is the 10th of March, 2021. Right everyone, let's get into it. So I went on my good friend Greg's channel today on YouTube called Dapp University, and we recorded about an hour-long video, obviously about Ethereum, talking about, layer 2, NFTs, the bull case for Ether as an asset, all that sort of stuff. So, after you're done watching this video, I highly recommend going and checking that out. It's in the YouTube description below. I mean, I always love talking, about Ethereum, but in particular, I love talking about just the narratives, right? And like the stuff that's happening, in the future, like layer 2 and, ETH as an asset as well is really exciting. I think, a lot of people still don't understand what makes ETH valuable, right? And ETH's monetary policy, why people are really bullish on it. I think I'm actually going to do a video, like a standalone video on that soon, kind of like the bullish case for, ETH and Ethereum as a network as well, because there's still a lot of misunderstanding out there, right? I mean, I don't know about you guys, but whenever I try to explain kind of like crypto to a new person, they immediately get like, I guess, Bitcoin and like how it's like got a cap supply and it halves every 4 years. That's very simple to explain, but ETH's monetary policy is much, I guess, denser than that. And in my opinion, better, but it is definitely denser and it takes a longer time to explain it. But I'm not going to explain it now because it's in that video towards the end of it if you want to skip ahead to the end. But I highly recommend watching the whole thing. It was a great interview. And I mean, it was kind of like a live stream that we did. It wasn't really an interview. It was just us chatting. Greg's really smart. He teaches kind of like blockchain development, specifically on Ethereum. So if that's what you're interested in as well, definitely go check out his channel. And that'll be linked in the description, of course. So I think the biggest news of the day was this news out of MakerDAO, and Sam McPherson here posted it on Twitter. So a little bit of background here before I get into what the news was. So, I've spoken about layer 2 solutions a lot, and in particular, I've spoken about Optimism's optimistic kind of Ethereum network, right? And one of the drawbacks of this solution was that kind of 1 week withdrawal delay, right? You've probably heard about this on Twitter before. I probably mentioned it before as well, where it basically, you have to wait up to a week to withdraw your funds from the optimistic layer 2 back to Ethereum layer 1. And people were saying, oh, well, this is like, such a massive problem. It's going to kill optimistic rollups. It's not going to work because of this. But I've said before on the refuel that I think that it's not like a showstopper or anything like that. And because there's multiple ways to kind of get around this. And Sam McPherson from, MakerDAO here, basically posted this tweet thread with a link to kind of like the proposal down the bottom here, which they've dubbed the Optimism Dai Bridge, which aims to solve the 1 week withdrawal problem for optimistic rollups. And he explains how it works in this thread, but basically this image kind of gives you an idea about how it works as well. Kind of like there's basically a bridge from these L2s to L1, and you can see like Uniswaps there as well. And I obviously think that Maker is going to be deployed to Optimism at this stage, right? So that's another project that's probably going to be on Optimism here. But basically, he explains how it works here. They basically take the Maker protocol basically takes advantage of I guess what is it here? The result of the computation up here of the layer 2 kind of solution here with an off-chain proof. I mean, I'm getting pretty technical here, so I kind of like didn't want to dive too deep into the technicals. But basically what they can do is they can take advantage of the way this kind of technology works and offer a new token, or not a new token, but like a token called FDAI, which represents a claim on the layer 1 DAI through a vault, which allows locking up FDAI in exchange for newly minted regular DAI. And then FDAI is then validated by a Maker Oracle, which you can verify against the CTC, which is this kind of computation proof up here that I was talking about. And there's a nice little image here that kind of explains how it works. I think my camera is kind of blocking it off if I zoom in there. But basically, this solves that 1 week withdrawal period problem. And doesn't come without its own trade-offs, don't get me wrong. It is not something that's like fully, trustless and decentralized. And, there's still an oracle there, which means that if the oracle for some reason is compromised, then, this probably wouldn't work, or this could be, potentially compromised. But this was the biggest news to come out of today. And Patrick McCrory actually does like a really good job here of breaking down the trade-offs. There's some news from Arbitrum that I'll go over soon as well. Actually, I'll drag this over here. But basically, Patrick breaks down that with Optimism's kind of FDAI solution, where they're going from L2 to L1, basically he says the former, which is the Optimism solution, requires a new validator set who checks the layer 2 logic to verify that everything is okay before minting the coins. Downside is that it's not an atomic operation, and there's no guarantee that you'll receive your coins. And obviously the upside is that he says here the quantity to withdraw is limitless, yes, but also you get to, fast withdrawal basically. And then basically he compared it to Arbitrum's solution, which I'll go over soon, and I'll come back to his comparison there. But, I don't think the trade-offs are too bad here. I think, for getting instant kind of liquidity and kind of like an instant withdrawal here, or at least a fast withdrawal from Optimism, where before it was going to take a week, like that's really awesome, right? So I think that solves like a big problem. I also think that I've said it before, but I do think that this problem is probably more pronounced than I think it will be, because once everyone's on layer 2, there's going to be bridges between the different layer 2s and things like that. And I think there's going to be ways around this, but I don't think people are going to kind of get out of layer 2. I think people are going to live in layer 2 at the end of the day. And there are already people doing that. A lot of people are living in Loopring and other solutions that are available because that gives them what they need. But when we have all the apps on there, you just won't want to go back to layer 1 because the fees are going to be high, right? Like, why would you pay a $50 fee on layer 1 when you can do it for free on layer 2? And I guess the reason would be that layer 1 would still have a lot of the smaller apps, I guess, that haven't migrated across, or maybe there's opportunities on layer 1 still and stuff like that. Or maybe there's some things like flash loans that you want to do on layer 1 that haven't been built on layer 2 yet. But most users, are going to be on layer 2. Like, I don't imagine users who just basically do basic things like go and do a Uniswap trade, right? Put their ETH as up as collateral, or kind of yield farm. I feel like those apps are all going to be on layer 2 very quickly, and then it won't really, most users won't really ever need to leave layer 2 until they maybe need to off kind of like off-ramp to an exchange. And I actually think that Coinbase is going to support Optimism. I've said it before. I think they're going to support Optimism withdrawals and deposits at some point. If they do it like this month, that would be absolutely crazy, right? Because Optimism is still coming this month. If they enabled that at the same time, that would be like a complete game changer, because all the new users coming into the ecosystem can choose from, to go from Coinbase to the Ethereum main chain or to Optimism, which would be really, really positive as well. And because I believe that a lot of new users now in the Ethereum ecosystem, their first experience is just high fees, right? Which is sad, because we have such an awesome system that we've built and it's just being hampered by these high fees. So if we can give them a nice first kind of impression, I guess, of Ethereum, then that's much better. So I think that's what Optimism will do. But yeah, really awesome to see this from the MakerDAO community here. And Lucas had a really great kind of reply to Sam here, where he said, Ethereum is a giant, productive, interconnected, permissionless Lego. If one team hits a wall, he says one team hits a wall, with a question mark, other teams bring a ladder, while the third one is already building a tunnel. Never-ending innovation and collaboration. You can't copy or replicate such a community. I mean, this is just like, I wrote about this in the Daily Gwei newsletter, but I wanted to summarize it here. This is the bet on Ethereum. This is a large part of the Ethereum bull case and why Ethereum means so much to so many people. Like, as I was just saying, this withdrawal delay was a problem that a lot of people were talking about, and I just knew people were working on solutions for this already. Like, I just knew it. It's not just the MakerDAO community. I'm sure there's many other solutions, like Connext is also working on stuff there, right? Hot Protocol for bridging and stuff like that. I'm sure there's plenty of people working on this. And that's just not something you get in other communities, right? In the Ethereum community, you have such a vast kind of like, field to play in, and you have such a vast talent pool to kind of pull from, and that's what happens, right? Which is just amazing. I love his analogy here that, if a team hits a wall, one team will bring a ladder while the other team is already building a tunnel, because there's multiple ways to tackle these problems. Because, this kind of MakerDAO, like Dai Bridge from Optimism to mainnet is going to be different to a solution that someone else comes up with. And that's going to be different to another solution. So we have multiple solutions for the same problem, which, come with their own trade-offs and things like that, but which are really, really bullish, right? For the the whole ecosystem. And I constantly think about the way kind of like, I guess, Bitcoin approach scaling, where they put all their eggs in one basket, and that being the Lightning Network. Because to me, the Lightning Network is a failure. I don't know if it's going to be successful in the future. I have my doubts. Up until this point, it hasn't really done much. And I just think that it just, for a number of reasons, it has kind of been a failure up until this point. But a big reason is definitely that, they've put all their eggs in one basket, because like the Lightning Network very clearly, from my point of view, doesn't work as well as it should or it could. Doesn't work as advertised. I know they're still working on it, but the fact that they've gotten like next to kind of like near zero adoption while Ethereum has like exploded in use kind of like just signals to me that, people don't really want to use Lightning Network, especially when they're bringing their BTC over to Ethereum, in droves, and it kind of like outnumbers the BTC and Lightning Network by a ton. But I don't want to bash the Lightning Network, but it speaks to the point that, in Ethereum, we wouldn't just go all in on one solution, right? One scaling solution. We didn't just go all in on sharding, for example. We didn't say, okay, we don't need layer 2 because sharding's coming in ETH2. And then in the end, what ended up happening was that sharding ended up being a much more complex thing to implement, right? At least data sharding is fine, but like execution sharding is very, very difficult to implement, right? In the way that we want to. So we have like layer 2 as well, right? We don't have just one solution, we have multiple, and that kind of like gets away that execution risk as well, and that kind of like delivery risk there. So very, very bullish, comment, I guess, like from Lucas here. And I wrote more about it in the newsletter. You can go check that out if you want to. But speaking of layer 2 as well, Arbitrum released their fast cross-chain ETH transfers. So you can get your ETH from L2 to L1 without waiting for the dispute period using Connect's network. Now, I said that Patrick wrote about this here. So basically, the way that Arbitrum is doing it is they're using an atomic swap with intermediary. So it's basically all or nothing. The upside is that there's no new trusted kind of party here and close to instant withdrawals. The downside is that the needlework to reduce impact of free American call option plus a limit on throughput withdrawal size. I don't exactly know what that means. He's using some terms that I haven't seen before, but I guess the second part means that there's a limit on kind of like the throughput of these instant withdrawals and how much can be withdrawn at once. Again, both of these solutions work. They just have their own trade-offs here. And I think it's really great. I mean, Arbitrum is also a optimistic roll-up solution as well. So, they also suffer from that 7-day withdrawal period, but they're tackling it through a different way here using Connect. And you can actually try this right now at bridge.arbitrum.io, and I'll link it in the description for you to try out. But yeah, 2 solutions to the same problem, and we'll see which one is the best one, which one people want to use. I mean, they have their own trade-offs. Maybe there's no best one. Maybe there's just like what's kind of like best for the situation, because there's different situations where withdrawals happen. But as I said before, as I was talking about before, I don't think that we're going to have a world where everyone's going to just be withdrawing to layer 1 or wanting to withdraw to layer 1. They're just going to be in layer 2, and then when they want to cash out to fiat for taxes or whatever other reason, they will just go to the exchange, right, from the layer 2. They're not going to need to go to layer 1 to do that. So very, very bullish stuff going on here. Very exciting times for layer 2. So Stani from Aave had an interesting tweet today where he said that a $100 billion Coinbase valuation demonstrates how undervalued DeFi is as an ecosystem. I've been saying this for a long time on the Refuel, right? About how I think that the market is severely underpricing DeFi still. And that's not investment advice, but when you look at the amount of traction DeFi has just with layer 1, right? And layer 1 is limited, where there's the high fees, right? There's the low scalability. What do you think is going to happen when we have layer 2? What do you think is going to happen when we basically unshackle Ethereum, essentially? Like we take off the chains that it has on its ankles and we say, go, you're free, run for it. Like, I know what's going to happen. DeFi is going to go like 10, 100x from here, 1000x from here. And the fact that Coinbase, an exchange that does similar volumes to Uniswap, right, has a $100 billion valuation, which, mind you, is worth more than all of DeFi combined by a lot. What do you think is going to happen, right? I know what's going to happen. All the DeFi tokens are going to re-rate up for the projects that are succeeding. I think so many of them are still undervalued. And again, not investment advice, but if you look at the metrics, you look at the daily volumes, you look at the total value locked, you look at the growth, right? The month-on-month growth of these protocols is absolutely insane. You don't see this in the traditional world. Like in the traditional startup world, if you had 100% month-on-month growth across like all your metrics, right? It'd be like, people will be saying to you that you're lying, right? You're faking them. But we can actually see that people aren't faking these metrics because it's all on chain. So that's just even more exciting, is that no one can doubt this stuff. Like you can say, people, maybe it's being faked or whatever, right? But you can do investigations and see if that's the issue, see if that's what's happening. And with Ethereum, it's very hard to fake it because of the high fees, right? I know I've said that, something like BSC had fake volume and stuff like that. And I believe that they did because it's just cheap to do that. and it's a centralized kind of arena there. Not to say that you can't fake volume and stuff on Ethereum, but it's very expensive to do so, right? If you wanted to fake volume, you'd have to spend like thousands, tens of thousands, potentially millions of dollars to fake that amount of volume. And for what, right? What are you trying to fake the volume for, right? Maybe to pump the token a little bit, and if the pump doesn't work, you've wasted all your money, right? So from that point of view, yeah, it's much harder to do. But in general, if we just take that, most of the volume is real, right? And real activity from real users, which I think it is, like almost all of it probably is, then yeah, everything is kind of undervalued right now. And I think once Coinbase goes live, is actually trading in the proper kind of markets, because it's just trading on secondary markets right now. But when it trades on the primary markets, people are going to eat up this narrative more so than they are now. They're going to realize that, okay, if Coinbase can be worth this, then these protocols that are doing similar volumes, that have much more potential for growth, mind you, can do this. Because if you think Uniswap is just going to stop at the volumes that they have now, I mean, I got a bridge to tell you, seriously. They're not going to stop. As soon as Uniswap goes to layer 2, their volumes are going to absolutely explode. And V3 still hasn't come out, right? So I know Uniswap it has a very rich valuation now, and I actually think that maybe it's getting to a point where it's like pretty hot, right? It's pretty much already there. But there's not just Uniswap. There's other decentralized exchanges that are growing rapidly as well. There's other DeFi apps that are growing rapidly. They're still kind of like not worth near as much as Coinbase is worth. So if you take all that into account, you can very quickly come to the realization that yes, DeFi as an ecosystem is extremely undervalued, and that's not going to last forever. So again, I know I've said it twice already, but not investment advice. Please do your own kind of research. But it's hard for me not to get excited about this, and hard for me not to say that it's not undervalued based on the research I've done and the metrics that I've looked at. And I've gone through a little bit of these metrics before. You can go to like Token Terminal's website. You can just Google it and kind of see the metrics on there and see what's undervalued versus overvalued and stuff like that. Because some of this stuff is overvalued, don't get me wrong. But yeah, it's just cool to kind of like see Stani say this. I mean, Stani's the founder of Aave, right? So I mean, I trust his opinion on this sort of stuff, and I'm glad that he kind of feels the same way as I have for a little while. So Mintable, the app that lets you create NFTs, have announced today that they're actually going to be partnering up with Immutable X, which is a layer 2 NFT scaling solution going live soon, to deliver, basically zero gas NFT minting and trading, which is awesome. Like, I've seen some NFT apps go to other chains because of the fees, and I just kind of think that's very short-sighted, and I think that they are basically shooting themselves in the foot because these other chains don't have users, so why are you moving to another chain? We have layer 2, so I'm very glad to see Mintable going the layer 2 route here, and not just any layer 2. Immutable X is, using Starkware's technology, which powers DYDX, and it also powers Diversify. So this isn't just like a small little kind of shop that's doing layer 2. They're a big deal. And they've got some really great technology. I mean, everyone that I've ever spoken to about Starkware rants and raves about how awesome the team is, how great the tech is, how bleeding edge it is. So this is like proper, layer 2 tech. This isn't just anything. So I'm really glad to see Immutable X getting all these partnerships lately with these projects, because they have like a very aligned kind of ethos as well. I wouldn't call them like ETH maximalists, but I've spoken to some of the team members, and just the way they put themselves out there on Twitter. Like, I know, and you kind of heard Robbie on the one of the co-founders of Immutable on the Bankless podcast, if you listen to that one, where he basically said, Ethereum is it, right? It's super secure. ETH as an asset is amazing, right? Why not use that kind of layer with layer 2? So it's really great to see apps embracing this and sticking with Ethereum, right? Obviously I'm very happy about that. And as much as I do believe that it's probably going to be like a multi-chain world eventually, I do think that most of the activity is still going to remain on Ethereum, and the layer 2 technology is built on top. So yeah, awesome to see this from Mintable. So Coinbase Pro announced the listing of 3 new tokens today, which was funny because these are tokens that, well, I think at least 2 of them are tokens that are very hyped up. So they announced that they're going to list Matic, which is now Polygon, obviously, Skale, which is Scale Network, and Sushi, which obviously is Sushi Swap. So I think Matic and Sushi are the most hyped up on Twitter. And full disclosure here, I am an advisor to Matic, and I have tokens that vest over time, and I have Sushi tokens. So I just want to get that out of the way. But the reason I'm talking about this is not to pump my bags, but it's just to say that it's funny how Coinbase is now doing these listings of like 3 assets at once, right? And it's also very interesting to me that they listed Sushi in particular, because if you know a little bit of the background here, Coinbase listed Uni on day 1, right? Coinbase has connections with Uniswap. I don't know if they're an investor in Uniswap directly, but Coinbase's co-founder that left a few years ago, Fred Ursum, is the co-founder of Paradigm, which is a VC fund which had a huge stake in Uniswap because they invested back in 2019. And I've spoken about this before. So there's a connection there. So I would have thought, they wouldn't list Sushi because it's a direct competitor to Uniswap, but they did, and I'm glad they did because I believe that you shouldn't not list the token just because it's a competitor to something that you're invested in. And I mean, Coinbase invests in a lot of things. If you go to the Coinbase Ventures website, that's their kind of like investment arm. You can see how many things they've invested in, and there's overlap there at the end of the day. And they've got lots of different kind of like, I wouldn't call them conflicts of interest, but they've got lots of different kind of overlap between the investments that they have. And I think they're an investor in Matic as well, so that explains that. And I think they're an investor in Skale. Now, I don't really know much about Scale Network. Maybe some of you do. I know that it is trying to scale Ethereum with what they call elastic blockchains. I think it's a side chain. I don't think it's layer 2. I don't want to say it is or it isn't because I haven't looked into it too much yet. But I think it's a side chain solution that is just kind of like branding it as Ethereum scaling because, you want people to kind of, I guess, like, not kind of like hate you or call you an Ethereum killer or whatever. And Matic is a funny one, or Polygon, because they are building layer 2 solutions and their current live iteration is like a hybrid. I mean, I wouldn't call it a sidechain. I know I have in the past, but I actually learnt more about it recently and learnt more about the underlying tech of how it works. And I've spoken about this before where they actually use their own validator set, but they do checkpoint to Ethereum. So they do have like Ethereum as like a security, I guess, like guard on the network where if they needed to, they could recreate the entire state of the Matic network using that checkpoint on Ethereum. And they can actually slash validators using Ethereum too. Not Ethereum 2.0, Ethereum as well. But yeah, so I think there's going to be like some more information coming out about that because I as an advisor to the team, I encourage them, hey, you should put more information about this because everyone still thinks Polygon is like a pure side chain or Matic is like a pure side chain, and we should change the kind of narrative around that. So yeah, I mean, not to shill too much there, but I think it's important to make the distinction here. And again, I'm not an expert on Scale Network. I need to do more research on it. But as far as I know, it is a kind of normal side chain kind of solution. And a Sushi, of course, is a decentralized exchange, right? But yeah, cool to see Coinbase listing more assets. I was wondering when they would list more assets, actually, because the other day I was talking to a friend and I'm like, do you reckon they're going to wait until they IPO to list more assets? Because maybe they want to drum up, I guess like volumes when their IPO is going on. But I guess they can do that before the IPO, and maybe it's even better doing it before. So yeah, there it is. I'm curious to see what they list next. They're still missing a lot of the top kind of assets out there, especially the top DeFi assets. So we'll see how they go. So Tim Ferriss. So for those of you who don't know, Tim Ferriss is a pretty famous author, podcaster, investor. He's been around for quite a while. I'm sure a lot of you are aware who he is. But he also has as I said, he has a podcast, and he had Vitalk on today with Naval as well. So if you're interested in listening to that, you can kind of, I guess, go to the page here. It'll be linked in the YouTube description. Kind of like listen to it. I haven't listened to it yet. It's definitely on my to listen to list. But always very interested in in listening to Vitalk talk. I think he's very well spoken. I think he has very high emotional intelligence, so he speaks about things in a way that isn't kind of like, he's not like speaking from emotions, he's speaking from logic, which I really like as well. And he also talked about, see here, life extension technology as well, which is something that, for those of you who don't know, I'm pretty sure Vitalk splits his time between like mostly Ethereum, and on the side he does a lot of research into life extension, and he does a lot of stuff there. He donated like millions of dollars recently to that technology as well. So I'm very interested to hear what he has to say, but yeah, go give this a listen if you haven't yet, and I will definitely give it a listen very, very soon. So Hasu posted this little mini thread here about kind of like miners, and he basically said here, after reading the Ether mining subreddit and watching miner YouTube for the last few weeks, I came to the conclusion that many miners have totally different picture of Ethereum than we do, we being the community at large. And then he basically states some points here. He says, most are convinced that devs make all the decisions, including about 1559. If non-devs support a proposal, they are quote-unquote paid shills. And Hasu says he actually blames this on the Ethereum community for peddling this warped image themselves for many years. Just yesterday, I saw a flowchart for the EIP process that didn't even mention community consensus. And then 3, most miners fundamentally reject the idea that they are being paid by holders. And then, quote, the ETH we get is paid for by the protocol, not holders, end quote. 4, same goes for fees. Most miners have no concept of who transacts or why they pay a lot of money for it. And then Hasu finishes his thread by saying Reddit and YouTube communities are places where hobbyists meet, so this clearly isn't representative of the overall mining community. Larger players might have totally different views. Now I want to go back up to the charts he has here. So he has a chart, basically a pie chart, where it says how miners see Ethereum, and you have like this little yellow section, which I guess is like maybe 5% of the kind of network paid shills. Then you have like most of the community, being devs, and most of the community being miners. And this is the miners' view of Ethereum. But this is how Ethereum actually works, right? A large chunk of it is holders. A large chunk of it is DeFi users. An equal share is app devs, devs in general, and miners. So devs in general, I think he's saying app devs like DeFi app devs, and devs as in protocol devs and miners. And this is true. I mean, this is exactly how it works, right? The ETH holders have an extremely vested interest in seeing the network kind of continue as it is, and having kind of like upgrades be put into the network that are beneficial for Ethereum, but also beneficial for ETH as an asset. DeFi users, of course, have like a very large say here. Because they're the ones going to be encouraging the projects to support, certain EIPs and certain things. And if there was a chain split, they would decide where they want to go. And then app devs obviously decide where they want their apps to go and what chain they would want to go on and what they want to follow. Protocol devs as well have a pretty, I mean, not a huge say, and they kind of follow what the community does, but they have like a pretty good say here. And then miners as well have like an equal share there. I would actually argue that miners don't have this big of say. I would actually argue that miners have like a small say, like maybe even 1% of what happens with the network. Because as I've said before, they are service providers and they are paid ETH for their work, right? Directly by the protocol, mind you. So I do not think that miners deserve to have like a really loud voice. And actually, after hearing them and hearing all their arguments against 1559, and this isn't all miners, right? I'm not trying to generalize here, but the miners that I did hear, they very clearly, as Hasu illustrates here, do not understand how things work. They very clearly don't understand EIP 1559, for example. They very clearly do not have the same kind of, I guess, outlook for Ethereum than the rest of the community does. And they very clearly aren't aligned, right? So at the end of the day, I can't wait to get off proof of work. I want to get on proof of stake as fast as possible. And I think that's going to happen sooner than most people think. But at the end of the day, we still have to deal with this until we're on proof of stake when the merger happens. And I know I've seen like a few people kind of talk about this miner revolt that's going on April 1st, where they're actually on April 1st, they're encouraging like all different miners to redirect their hash power to the Ethermine pool. Now, Ethermine has been vocally opposing EIP 1559, and they're saying that they want to get over 51% of the hash rate on Ethermine to demonstrate to the the community and to the network that this is like a bad idea, and demonstrate that if miners want to band together, they can. This is the stupidest thing I've ever seen in my life. Like, I'll just be straight up. This basically just wrecks all the game theory of mining. Like, one of the concerns is that the Ethereum network is going to become insecure because of 1559. So their kind of like solution to this is to basically band together, collect more than 51% of the hash power into one pool, and show that, they could attack the network at any time. Like, how does that even work? Like, what is that, right? It blows my mind, the kind of like short-term thinking here from these miners. And like, it just doesn't make any sense to me. And I don't want to bash miners again. I know I'm ranting, but it's so weird, right? And I get why they're doing it, because they're going to get a pay cut, because some fees are going to get burned. But as I've said on the refuel, overall network fees are down 50% over the last 2 weeks. That's more than EIP 1559 is going to burn. Have you heard anything about that from miners? Have they said absolutely anything about that? No, they have not. You know why they haven't said anything about that? Because they know they can't control that. And the thing is, they should know they can't control EIP 1559 going in or not at the end of the day. So it's just bizarre, and it really is. And I'm not gonna continue this. I know I've talked this to death, but I really wanted to kind of reassure people that have been asking me about this, that miners are not going to do anything here. They're all talk. You know, I don't even think they're going to get to that 51% kind of hash rate on Ethermine. I think there's a lot of miners that support 1559 and are going to like, you know, not direct their hash power to Ethermine. And I think if for some reason they do get over 51%, they're just going to basically, I think what's going to happen is they're actually going to force the devs' hands. And instead of getting what they want, the devs might just say, oh, well, let's just do the merger. Let's just merge ETH1 into ETH2. I'm just speculating here. But if you really want to play with fire, well, you're going to get burned, basically. And then they're left with nothing. Then their profit goes to zero because no one's going to want to stay on the ETH1 proof of work chain, right? They might try to continue it on, but they won't have the ETH ticker. They'll have like the ETH classic ticker or something, right? Or the ETH power ticker. And then they'll have to get exchanges to list them, which they probably won't because exchanges won't want to be in that mess. So yeah, it just throws the whole thing off. So the miners doing this very short-termism. It's not something I would worry about. But I am very disappointed and kind of like pretty upset about it, if I'm being frank, that we have to deal with these kind of like people that and these kind of like groups that think they know better than the rest of the community. They think they know what's right and what's best, and they're threatening us with this kind of crap. And yeah, I'm going to stop there before I go on an even further rant, but yeah, just something to keep in mind. But I think that's it for today's episode, everyone. So thank you again for listening and watching. Be sure to give that video a thumbs up, subscribe to the YouTube channel, subscribe to the Daily Gwei newsletter, join the Discord channel, and I will catch you all tomorrow. Thanks, everyone.